And looks like it's working. So we should be getting live on Facebook. So thanks for joining me today. Apologize to any of you that saw the first video that the audio wasn't quite working. So we're doing it again. Take two. Today we're going to talk about forbearance, what forbearance is, what it isn't, and all of that fun stuff. So we've been getting a lot of questions about forbearance and what it is. They've been during this crisis. You've heard that term a lot. Back in 2008, we did not hear forbearance hardly at all. Very few people were able to negotiate with their mortgage companies and put their loan in forbearance. Anyway, today we're going to talk about what is forbearance, how does it work, what it is not, how does it get paid back, and will it affect my credits? So what is forbearance? Forbearance is an agreement between a lender and a borrower to temporarily suspend debt payments. For mortgages, lenders may opt to foreclose on borrowers who are unable to make their payments. So how does it work? So the important piece of this is to contact your mortgage servicer and negotiate the terms. So, I lived through 2008 as a realtor, which is our big last, the whole housing crisis, and lived through all the short sales and all the foreclosures, which we're going to get into that in a minute. It's two more. That's another F word. Foreclosures and short sales is a big oxymoron, which we'll talk about in a minute. But the first thing to do is if you've lost your job and you are not going to be able to make your payments, you need to pick up the phone immediately and get a hold of whoever you send your payments to for your mortgage. Call them and tell them you want to apply for a forbearance. Because of the CARES Act that Congress passed about a month ago now, government-backed loans can qualify for forbearance. This includes FHA, VA, USDA, Fannie Mae, and Freddie Mac loans. So, and that added up is probably 90% or more of the loans out there. So odds are you have a loan that falls into one of those categories. Other loans might fall into that category as well. You still might be able to negotiate forbearance with, let's say, a local credit union. If that's where you have your mortgage and the mortgage has not been sold, they're still servicing it, managing it, and holding the mortgage. You're going to need to talk to them. So that's the first step, is to get on the phone, get a hold of them, and apply for forbearance. What it is not, it's not a way to get out of your obligations. You're still going to owe the money that you potentially defer. So how does it get paid back? Up front, when you call your mortgage servicer to talk to them about going into forbearance, that's when you negotiate your terms with them. It could be you negotiate, I can't pay for the next 3 months, could be for the next 6 months. Right now, the way the CARES Act is set up, it can go up to 6 months and then potentially go up to another 6 months. The interesting piece with all of this is it's all so new. There's a lot of different things you're going to see on all kinds of different websites and people talking about. I think the truth is because it's still so new, we don't have a lot of data back yet. So if you need to go into forbearance, make sure you call your lender. Make sure you even reach out to us. We're going to keep our ear to the ground with all of this, just like we did back in 2008 with the short sales and foreclosures, so we can help our customers navigate their way through this, which is in their best interest. So anyway, it does need to get paid back. A quick example is, let's say your mortgage payments, so I can do the math easily, $1,000 a month. So if you pay $1,000 a month and you've told your lender, hey, I'm not going to be able to make my payments for the next 6 months, and they agree to that, at the end of that 6 months, you're going to have to come up with $6,000. Or sometimes what we've been told is these lenders might let you then take that $6,000 and spread that over some time period. Whether the time period is 3 months, 6 months, 12 months, you will have to pay that back. I know I've heard somebody say that it can get tacked on the end. I've never heard any examples of that yet. I think what's really happening is that needs to be paid back immediately at the end of that 6 months, or they might let you take that and again, spread that out over a short period of time. They're not going to let you spread it out for the next 10, 12, 15 months. Will it affect your credit? We've been getting a lot of questions around that, and it depends. So odds are yes, probably yes. Most lenders are, when you go into forbearance, will probably report that to the local credit bureaus. That would be after you figured out and you've talked to the lender about, will they authorize forbearance? What's the payment period look like at the end? The next question I would ask is, will this affect my credit? Will you be turning this into the local credit bureaus? So that way, at least you know exactly what you're getting into before you agree to forbearance. Odds are it's probably going to affect your credit. What forbearance, again, is, it's a tool to help you navigate through tough times. The other thing that I also could see this is as a tool to potentially try to sell your house while you're in forbearance. An example would be, you lost your job, you have a lot of equity in your house that you need to get out to live on. You can't qualify for a home equity line probably because you don't have a job. So this could be a way of applying for forbearance, deferring these payments for the next 3 to 6 months, list your house, sell your house, then take that equity and then live on the equity. Of course, then you'd have to go into rent. And of course, your credit might be a little dinged up because of that, but nowhere near as bad as a foreclosure. So a great resource I did find was the CFPB's website. I have a link here. Again, I'll put that link into the comment section so people can see that. I thought we might as well talk about short sales real quick too, because if you're in forbearance and now all of a sudden you can't come up with that payment at the end of the 6 months, you still might have a lot of equity in your house. And you might now have decided, okay, it's time to hurry up and sell the house. I guess if you have equity, we don't need to talk about short sales. This would be a case if you don't have a lot of equity in your house. If you don't have a lot of equity, what a short sale is the lender agrees to take less than what's owed. So a case in point, you have a $200,000 home, you owe $210,000 in the mortgage, or better yet, you have a $200,000 home that you just bought and you owe $190,000 on the mortgage. But if it were to sell, there's 10 to 20 grand in fees. Now all of a sudden you're upside down. So back during the last housing crisis, we were able to negotiate a lot of short sales for our customers. The oxymoron part of that is it doesn't take a short amount of time. It takes a long time to negotiate a short sale. By the time you get the house on the market, find the buyer, apply for the short sale at the lender could take 3 to 6 months to process that short sale. And then you have to find a buyer that's willing to wait that 3 to 6 months, which was generally the problem. So it will also affect your credit, not as bad as a foreclosure, but probably worse than forbearance. Foreclosures, the other F word. Key points of foreclosure is basically foreclosure is where you've stopped making your house payments. And because you've signed a promissory note and a mortgage with your current lender, they used your house as collateral. They are forcing you to finish making those payments or they're going to foreclose on your house. What happens is they will take you to court to force you to make the payments or vacate the house. Those can take anywhere from 3 months in the really fast side to up to 12 months. And yes, it will definitely destroy your credit. But obviously, there's sometimes that's just what happens. So people get in those tough situations. Let me go see if anybody has any questions here real quick. As of right now, we don't have any. So if anybody has any questions, feel free to reach out or shoot me a quick text or note on Facebook. So the next thing we are going to dive into is today's real estate update. So instead of doing my big charts and graphs that are 18 pages long, I've just decided we're taking just the key data and we're putting it on this page. So let's get into that. So what we have here is you can see that I have two columns. I have year to date, 2019 versus 2020. And then the next column over to that, we have the rolling 12 months. And I did that for new listings, for sales, under contract, sold, etc. We are really starting to see COVID affect the market. So new listings are down for the first 4.5 months of 19 versus the first 4.5 months of 2020. We're down almost 40%. It's 37, 38% less new listings this year than last year. For sales is down 66%. So there's hardly any homes available to purchase. Homes going under contract is down, but not nearly as down as the other two. It's down about 18%. And houses transferring or selling is only down about 8%. What does that mean? It means it is a crazy strong seller's market. Strongest seller's market I've ever seen, especially if you're under, say, 200,000 to 300,000. If you get over 400,000 and 500, things start to slow down a little bit. Average days on market is also down from last year. So homes are selling in about 65 days or going under contract in about 65 days. The other thing to realize on that is when you really dissect that, homes are really selling in probably about 7 to 10 days, or they're taking 90 days, which averages out to about 65. But what we're really seeing is they're selling in that first week, or they're not selling until month 3 or 4. And then average sale price is up up to 266. So it's up about 10%. Our rolling 12 months, again, what that looks at is May of 19 to April 20. Again, May of 2019 to April 2020 versus the previous 12 months to that. So May of 2018 to April 2019. We're not seeing as much affected there yet because, obviously we'll have to see how the rest of this year goes. But I wanted to look at that stat too, just to see what our rolling 12-month has been doing. New listings is only down about 3.5%. For sale, though, is still down a ton. It's down 28%. Homes under contract is actually up a little bit. Same with sold, they're up a little bit. Average days on market's actually down. And this is probably a more accurate way of looking at our average sale price and what's been going on. But our average sale price is actually up 6.2%, again, in those rolling 12 months. So, and just to remind everybody that these stats are for our broader West Side market. So everything from kind of like 77 to the Eastern Lorain County down through Strongsville, Brunswick areas. So if anybody has any questions about forbearance or market stats, please reach out to us. We can get you case-by-case numbers for your home when it comes to market stats. And then with forbearance, my heart really starts to go out to everybody that's going through this. Again, having navigated 2008 to 2012, it was heartbreaking to see so many of our customers that have lost their houses during that. And to think that we're going to have to live through some of that again is, it's horrible. Anyway. But we're here for you. So if you need any questions, you need guidance, if you're at a point where you're not going to be able to make next month's mortgage payment, reach out to us. We can help point you in the right direction and help guide you through all this. So everybody take care. And if you have any questions, just reach out to us. Thanks a lot.